The tariff tug-of-war, what Trump's second term means for U.S. and Canadian economies. On March 5, 2025, as Donald Trump's second presidency unfolds, the United States and Canada find themselves embroiled in a fresh tariff war. With the U.S. imposing 25% tariffs on Canadian goods and energy imports and Canada retaliating with its own duties on American products, the stakes are high for two of the world's most interconnected economies. This article explores the historical context of U.S.-Canada tariff disputes, examines the current escalation, and projects how this trade conflict might shape GDP and economic growth for both nations over Trump's second term. A brief history of tariffs between the U.S. and Canada. The U.S. and Canada share one of the world's most robust trade relationships, with over $2 billion in goods crossing their border daily. This partnership was formalized with the Canada-United States Free Trade Agreement, CUSTA, in 1988, followed by the North American Free Trade Agreement, NAFTA, in 1994, which included Mexico. NAFTA eliminated most tariffs, fostering a seamless flow of goods. Think Canadian oil powering U.S. refineries and American machinery fueling Canadian industries. By 2020, NAFTA evolved into the United States-Mexico-Canada Agreement, USMCA, refining the rules but maintaining the tariff-free framework for most trade. Yet, this harmony faced a jolt during Trump's first term, 2017 to 2021. A vocal advocate of protectionism, Trump slapped 25% tariffs on Canadian steel and 10% on aluminum in 2018, citing national security concerns under Section 232 of the Trade Expansion Act. Canada, blindsided by the move, retaliated with tariffs on $12.6 billion worth of U.S. goods, from steel to whiskey. The tit-for-tat lasted until May 2019, when both sides agreed to lift the duties, paving the way for USMCA ratification. That episode underscored a key lesson: while tariffs can disrupt the deep interdependence of these economies, Canada supplies 40% of U.S. crude oil imports, and 75% of its exports go south, often nudges them toward compromise. Trump 2.0, a bolder tariff play. Fast forward to 2025, and Trump is back with an even more aggressive stance. Barely a month into his second term, the U.S. imposed 25% tariffs on Canadian imports, and Mexican ones too, and a 10% duty on Canadian energy, announced in February 2025. The stated goals? Curb illegal migration and drug trafficking, like fentanyl, across the northern border and shrink the U.S. trade deficit, which hit $67 billion with Canada in 2024. Trump has even mused about Canada becoming the 51st state if it doesn't bend, a rhetorical flourish unlikely to materialize but indicative of his brinkmanship. Canada didn't flinch. On March 4, 2025, Prime Minister Justin Trudeau unveiled retaliatory tariffs on $15 billion in U.S. goods, targeting everything from machinery to consumer products. Calling Trump's move foolish, Trudeau warned of economic fallout but signaled readiness to fight. The stage is set for what some, like the Wall Street Journal, have dubbed the dumbest trade war in history. But how will this play out for GDP and growth? Economic fallout for the United States. Short-term pain: the immediate impact of Trump's tariffs will be felt in higher prices. Canada supplies nearly half of U.S. crude oil imports, and a 10% energy tariff could spike fuel costs, rippling through manufacturing, transportation, and household budgets. Add 25% duties on Canadian lumber, steel, and auto parts, and industries tied to cross-border supply chains, think Detroit's carmakers, face rising input costs. Inflation, already a concern after 2024's uneven recovery, could climb, prompting the Federal Reserve to tighten policy further. Trump's counterargument is that tariffs protect American jobs and boost domestic production. His first-term steel tariffs did prop up some U.S. mills, but they also triggered a manufacturing slowdown in 2019, shaving GDP growth by an estimated 0.2%, per the Federal Reserve. This time, with broader tariffs and a recovering post-COVID economy, the hit could be sharper. Long-term prospects: economists at Bloomberg project that a prolonged trade war could trim U.S. GDP growth by 0.5 to 1% annually through 2027. Pre-tariff forecasts from the International Monetary Fund pegged 2025 global growth at 3.2%, with the U.S. expected to hover near 3%. Now, growth might dip to 1.5 to 2%, especially if Canada's retaliation disrupts supply chains. Trump's promised tax cuts and deregulation could offset some losses, but the US's reliance on Canadian energy and materials limits the upside. A negotiated truce, as seen in 2019, remains plausible, perhaps by late 2025, but Trump's harder line may delay it. Canada's precarious position. Short-term shock: Canada's economy is far more vulnerable. With 70% of its GDP tied to U.S. trade, a 25% tariff wall could slash exports by billions. The Bank of Canada warns that a sustained trade war might shrink output by up to 3% over 2 years, effectively stalling growth. Energy, a cornerstone of Canada's economy, faces a double whammy: lower U.S. demand and discounted prices as producers scramble for alternatives. Early data from March 2025 shows the Canadian dollar sliding 5% against the U.S. dollar, inflating import costs and squeezing consumers. Long-term risks and resilience: if the tariff standoff drags into 2026, Canada's GDP growth could flatline or turn negative, a stark contrast to pre-conflict estimates of 2 to 2.5%. Diversifying trade to Europe or Asia is a long shot. No market can replace the U.S. overnight. Yet, Canada's retaliation, hitting $15 billion in U.S. exports, gives it leverage. A weaker loonie might eventually make its goods more competitive globally, but that's cold comfort amid immediate pain. Analysts see a resolution by mid-2026 as the likeliest outcome, given historical precedent, though Trump's unpredictability clouds the timeline. Winners, losers, and the path ahead. This tariff war has no clear victors. The U.S. might gain marginal manufacturing jobs but risks inflation and slower growth, with GDP likely settling below 2% annually through Trump's term. Canada, more exposed, could see near zero or negative growth unless it pivots fast, a tall order. Both nations' histories suggest they'll eventually de-escalate. The 2018 to 2019 steel spat resolved in under a year. Yet, Trump's bolder second-term agenda, coupled with domestic political pressure to win, could prolong the conflict. For the U.S., the wildcard is how much Trump's tax and regulatory reforms can cushion the blow. For Canada, it's whether Trudeau can rally international allies or exploit U.S. electoral cycles, like the 2026 midterms, to force a deal. Until then, businesses and consumers on both sides of the border brace for turbulence in an economic partnership too vital to unravel completely. Sources: Bloomberg reports on tariff impacts on supply chains and Canada's projected 3% output drop. BBC News coverage of February 2025 tariffs and Trudeau's foolish remark, e.g., March 5, 2025. The Wall Street Journal analysis titled "The Dumbest Trade War in History." Wikipedia historical data on NAFTA, USMCA, and Trump's first-term tariffs. International Monetary Fund 2025 global growth forecast of 3.2%.